The dog days of summer are settling in on the market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 28th. We know that selling or buying a home can be very stressful and confusing. We do these weekly videos so that you can understand how the market is impacting your options as a home seller or buyer. Like always, we'll start by looking at how the market performed this week. 44 homes are now on the market, which is up from the 38 we had last week. The average asking price of those homes is $1,954,000, slightly less than last week's average asking price of $2,031,000. 7 homes went pending this week, 2 less than last week, but the average pending price is now up to $2,327,000, significantly higher than the $1,730,000 we had last week. And 14 homes closed this week, more than the 11 we had last week, with about the average closing price being the same, $2,005,000 compared to $2,115,000. So now we know how the market performed this week. Now we can look at the broader trends and market indicators that help us determine where the market might be heading. But before we look at those, if you find this information helpful, you can hit the subscribe button so you don't miss out on future updates. And why don't you share it with a friend also? Everyone deserves to be in the know about their local real estate market. All right, let's look at those market indicators, shall we? Inventory continued the trend that started last week. And we're now back above that 40 home mark. 44 is still within what we would call a normal market as far as inventory is concerned, but it is pointing to a slowdown in the market. With the holiday weekend coming, I think it's likely that we'll see inventory creep up a little more in the next week. With inventory continuing to climb, it's no surprise to see that the turnover rate came back down below 100% this week. This line there. The turnover rate did dip into this level last month as well, and then quickly rebounded above the 100% rate. So it could be that this week's dip down to 88% could be just a minor hiccup and return to high turnover rates again in a week or two. But I don't see that being likely for a couple of weeks just because of the holiday weekend. The interesting thing to note, though, is that the average day on market for pending homes is only 1 day more than we saw last month. So homes that are selling are still selling quickly for the most part. The over-under number continued to come down to earth as well. Homes are now closing for about $50,000 over their asking price, a number that I think we will settle in at for a few weeks. But if this turnover rate doesn't improve quickly, I think we will see that homes start closing for less than asking on average by the end of the month. The 30-day rolling average dropped for average sales price by another $12,000 this week. And we are finally below that $2 million price range. And we are now seeing homes close on average for about 4% higher than the same time last year. However, the year-to-date turnover numbers show that we are still about 10% higher for the year than we were last year at the same time. So if the current rate of slowdown does continue, we will still probably end the year with a decent appreciation in our housing market for the year. The QQQ did take a slight step back this week as well. Barely. You can hardly tell that the line is dipping down on this chart here. It dropped about 1.5% from last week. The fund is still up more than 18% year to date, and the past 2 months have seen almost nothing but growth, with just a few minor dips here and there. So a 1-week drop in the fund is unlikely to disrupt any buyer confidence, but the slight dip is just one more thing to note in an otherwise down week. Interest rates remain pretty flat this week as well, only changing by 1 basis point. Nothing that will change a buyer's ability to borrow money in a significant way. I have been saying this a lot lately, but I do think that the 7%-ish range is going to be the norm for quite a while. This was a very soft week for the San Ramon home sales. And with the long holiday weekend coming this next week, I think it's unlikely to see any significant improvement this week. At this point, I think it's safe to assume, as homeowners looking to sell, that every effort should be made to present an exceptional house to the market if you are going to sell. That could mean splurging on that kitchen remodel, or really dialing in all the last little details that you've been waiting to finish, or being really aggressive with how you price the pricing strategy that you use to drive attention to your home. That is likely the only real way to expect multiple offers going forward. Otherwise, you might need to buckle in and be patient with the process as homes start to sit for more than a weekend. For buyers, that does mean that you can start to be more conservative with your offers and not feel as rushed into a decision just to finally get a house. You can breathe and take a moment. Be really considerate about each house that you are looking at. I hope this information helped you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below. We're here to, or you can reach out to us directly. We're here to help guide you every step of the way. Have a safe 4th of July weekend, and we'll see you next week with a new update.